Hello, welcome to another video. So we had a call recently and we were talking about market structure, and it was asked if the call was recorded. The call wasn't recorded, so I figured what I'm going to do, I'm going to put together a short video and I'm going to explain how I read market structure. Now, this isn't going to be the same as how everybody else reads market structure. There will be 1,000 people and 1,000 different ways of reading market structure. This is just the way that I use. This is the way that I read it, and I just want to give you guys an opportunity to look inwards at what I do when I'm taking a trade. This is something that I use on every single trade I take. I'm always looking at market structure. And I've got a super easy rules-based system as well that keeps me, for the most part, it keeps me out of trouble. Now, sure, I take losing trades. That's a part of trading. But I do so from a nice rules based approach. And what that does is it gives me consistency. If I've got consistency, then hopefully I'm not adding too much randomness into my results. So I'm going to pull up a chart and I'm going to show how I use a rules based approach to measure market structure. I'm going to keep this as simple as possible. And if I can do a good job on this, I'll keep this under about 10 minutes as well, he says, probably about 3 hours later. So we're looking at GBP USD. We're in a 4-hour chart. I'm starting with a higher time frame because the market's typically on a higher time frame. They're much cleaner. We're using GBP USD as an example only because I find the structure on GBP USD is much cleaner than, say, a minor pair that doesn't have the US dollar within it. So super easy rules-based system for how I mark up structure. All I'm looking for is a downward candle and then a continuation to the upside. And I'm going to put a line on it and I'm just saying who is driving price. And at the moment, we can see buyers are clearly taking price higher. Now, I want to be in the market as a buyer, typically when buyers are in control of price. When the market starts breaking under this low, that's going to tell me, hey, sellers are now in control of price. So if the market was to do this, I would say, okay, now we're in a selling market. So I use these lows as a way of telling me what price is doing now. We can look at this chart and we can say, oh, price is going up. But sometimes the market will get a little bit choppy. And I like to keep a nice rules-based approach. So I'm going to step through this candle by candle. I'm using TradingView. I do have the Pro version, I believe. So I'm able to use the replay function and do this candle by candle. Now, I have spent many hours on my own just going through the charts and doing these training exercises and doing this back testing. So at this moment, I'm not trying to predict where price goes. I'm just trying to say, can I consistently use this one tool, which is market structure, and can I eventually go on to use that tool to help me create repeatable, consistent trade ideas? And I'll say it again, market structure is the most crucial tool I use in probably a bag full of 6 or 7 tools. Market structure is absolutely number one. So if I cannot identify market structure, I am not taking a trade. So with that said, let's start running through these candle by candle. We're going to drop down the time frames. I'll start on the 4-hour, we'll work our way down and we'll see just how much messier and choppier it gets. But this, to me, it's the same on all time frames. I've traded the daily, I've traded the 4-hour. I went all the way down through the time frames, and for a couple of years, I was trading 1-minute charts. Why? Because price is a fractal, meaning what happens on the 4-hour, you often can find the same kind of patterns that happen on a smaller time frame. Now, it's important to note for me, price started getting more unreliable the lower time frames I went. So it was a trade-off. Do I want a 70% win rate, for example, and take these numbers with a pinch of salt? Do I want a 70% win rate trading the 4-hour chart? Do I want a 60% win rate trading the hourly chart? Maybe I'll have a 50% win rate trading the 15-minute chart. But what I'm going to get is more trades. And so it's that trade-off. Do I want to take 2 trades a week, maybe on the daily, or do I want to take maybe 2 trades a day on the lower time frames? So it was that trade-off. It was that trade-off of higher win rate, maybe lower risk to reward, or more trades, lower win rate, higher risk to reward. Anyway, I'm rambling. Let's get into this. So buyers are in control of price. And this is a nice, simple way of just seeing where the market goes. Now, until the market gets under this line, buyers are still moving price higher to me. Nice, simple rules-based system. Now, I'm going to put another line on this high, because if price can get above this high up here, it shows me, and it did, it wicked above this high. I'm now going to move this line to the last bearish candle that made the low right at the bottom here, because we got above this high. So we're still in a bullish market. We're still going up. Some people will say the candle has to close. Again, that's down to your discretion. I just like that the market tried to move higher and sellers pushed the market back. Now, until we break this low, buyers are still in control of price. To me, that's how I'm reading it. So we have two options here. Option one, market continues higher. Well, buyers are still in control of price. Option two, market pushes under this low and sellers are in control of price. And I'll explain why this is so important in my trading. So let's see what happens. So right now we're just sitting in a range. Like, I don't want to touch this. I'm waiting for the market to pick a direction. And this is what we're seeing. Finally, the market has picked a direction. Took many days. This 4-hour chart took a couple of days. Market finally pushed lower. Now, this tells me that sellers are now in control of price. So for a while, buyers and sellers agreed. They had a fight about price, and nobody could push the seesaw in a certain direction. Eventually, that's happened. Sellers have overwhelmed buyers. Sellers are now in control of price. So what I'm going to do, I'm going to take this high and I'm going to move it to here. Why? Because this is the last bullish candle before we made a new low. So sellers are now pushing price lower. And buyers are trying to push back. And again, we're just in a range until we take this high. So let me just move this down to this low. So sellers are still in control of price because we have come up here, we have pushed, and we've now broke this low here to this side. So I'm just going to keep these lines on and we can watch price. So sellers are in control of the market and now they've made a new low. Even though they wicked it, I'm still interested in this being the new low. So I'm going to take what was the old high and I'm going to move it to here, which is the last place buyers push price up before sellers made a new low. So this is the area that would need to be broken for me to say the buyers are now in control of price, or we're in a bullish market and the market has continued lower. Now we've made a new low from this candle. So I'm now going to take this and put it at the top of where the last buying action was in the market. So nice rules-based system. We've got buyers tried to push price higher. They went all the way up to here, and then sellers pushed down and made a new low. That's the important thing for me, is new lows, new highs. So now buyers have clearly taken control of price, and they were pushed back by sellers right into this range. Where's the low? Here. Now this is good because this is now getting choppy and messy price action, but this is what we're dealing with as traders. We've got to try and figure out where the highest probability trades make the most sense. Now I've got to ask myself, is this a bullish market or a bearish market? Is price trying to go up or go down? Well, it was going down, made this beautiful new low, and then pushed all the way up. But look how quick sellers pushed them down again. So we're right in the middle of this range. And this was a very quick, aggressive move. So right now, it's hard for me to identify who's in control of price. And so it's hard for me to identify a trade idea because I like the market to close ideally, and we're not seeing that. So what I'm going to do, I'm going to put this line on the top, and I'm just going to wait for the market to move outside of one of these, and it's going to confirm. If we move down, sellers are active and they're in control. If we move up, buyers are active and they're in control. It took me probably one or two dozen sessions to just start getting fluid with market structure. So please don't expect to get this just in one session, but I want to show you a rules-based approach that you can then go and spend a couple of hours, maybe every other day, and just get familiar with price, because this is in my from my technical understanding, structure is by far the best tool I have in my toolbox that helps me stay and remain a profitable trader. From a technical point, I'm not going into risk management. I'm not talking about psychology. I'm just talking about technically looking at the candles and knowing whether you should buy or whether you should sell. So I'm not sure at the moment. The market has now moved lower. Very, very, very clear to me. Sellers are pushing price lower. So I'm going to keep this line on the top because it's the top of the bullish candle, and sellers are pushing price lower. So we've made another pullback and we've made another new low. So we get to pull this line right down here now. So we can see we're just moving lower. Sellers are in control of price. So we're going to keep going. Now sellers are really in control of price. And until we break this high, sellers are still in control of price in my mind. So if we see a new low, we see a nice little white candle. So we get to move this line to here if we make a new low. So at the moment, nice rules-based system. So we've made a new low. Now I can move this down from here. And let's just get rid of that. So sellers are still in control of price. And this is the market we want. These nice kind of like almost like pull back, sell lower, pull back, sell lower. Very, very easy to say who's in control of price. Sellers. Nice and simple rules-based system. But we're going to get times where it gets choppy, especially when we get into the lower time frames. So let's keep playing it through. And we can see we get a nice pullback. We get some bullish candles. The market has broken this low. And so now what we're going to do is move this to the highest point after a bullish candle. So look at this substructure. Bullish, oscillated, and then it sells off. And I want the high that made the low. Now, this is discretionary. Some people go, well, it should be this. Myself, I'm interested in this. And what this allows me to do is always have the structure point where the selling volume came in. So another little tip. A lot of what I do isn't structured, so forgive me if I go off on a tandem. But if I was to mark up this high here and look at this price action for about a day, the market just agreed to go sideways. What I want is to move this to the area where the market sold off, as long as I've got a bullish candle before it. And what it allows me to do is take this. It should allow me to do it if I can click on it. No, I can't click on it. Let's get a new one. It allows me to put this here, and it shows me where the selling volume came in the market. Now, the reason I've moved this line to here is because we made a new low. Because we broke under this low, I've now moved this line from here down to here. So nice, simple, easy, rules-based system to read structure. And we're going to another pullback. And again, if we can break this low, I'm going to say that sellers are still in control of price. We have no, I'm going to say it's not a break. We just wicked it. I'm going to wait for a proper break. Nope. So at the moment, I'm still going to say that this is the high we want to break. I'm not going to move this to this level because this break here just wasn't enough. And if you're not sure about whether a break is good enough, retrace your steps and look at the times where the market broke like this. There's no doubt. If I'm in doubt, I stay out. So nice rules-based system. So right now, sellers are in control of price. We haven't quite made a new low. Now we have. Nice low. We broke this low down here. This candle here would have confirmed that break. And we get to move this line to here. And I know you're saying, Rich, this is all well and good. And this is getting a bit boring now. But this is fundamental that I can read the market consistently in a rules-based approach because my trades come directly from me measuring structure. So if you get one thing down in your trading, it's just to spend that 20 minutes a day, 30 minutes a day looking at structure and just moving these lines and saying, okay, so this is where the last bullish candle was. I want to take a line on the wick and then we move lower. Let me put that line right on the high. So we'll keep playing this through. Right, finally, we have got a change of character. So this is the low. This is the high that we wanted to break. Now, this is where it gets a little nuance based. And this is what I enjoy about trading because we can have 10 traders watching this and we can all have a different idea and a different opinion. And this is why price moves, because there are people with different ideas and different opinions. Now, when more people with the same idea or a similar idea start to agree, we see these extended moves in the market where there is an overwhelming supply of buyers. And there is a key word I've just used there, supply. Why did I use the word supply? Because I am a supply and demand trader. I want to understand where that supply is coming from and where that demand is as well. The structure to me is the most crucial part of my trading strategy. So although we're not going into, levels 2, 3, 4, 5, and 6 with this, what we're doing is we're getting this one simple tool repeatable so that we can just look at the market consistently. And that's going to help us have confidence in our analysis. So what do we got? We've got a nice wick to the high side. We couldn't break and close. Again, we've dropped back into the range. Who's in control of price? Now, many smart traders will say that this is a liquidity grab. We're not going to go into that. Oh man, I really want to go down the rabbit hole with this. I'm going to keep it simple because the thumbnail on this says for beginners. So nice rules-based way of reading structure. Markets come up, push back in the range. So sellers, to me, are still in control. I want to break and a close outside of this range. And sellers have continued lower. So I'm going to take this line. It's actually going higher now. This is the last bullish candle before we made a new low. So sellers are still in control of price. And let's see. So we're going to put this on the new low. And I'll drop down the time frame. We'll get a little bit more action and it will get a little bit more choppy. But it's all the same stuff. You can do this on 1 minute charts. It's just incredibly noisy. So right now we're just in a range, but sellers were the last people to make a new low. So I'm very, very interested in being a seller in this market. So now finally we have a break and a close above the high. Buyers have now taken control of price. I get to move this line to the last bearish candle, which is here. And we can see that buyers are now taking control of price. Now, for those of you who have made it this far, I want to just stop and acknowledge something with this. Why is structure so important to me? Why is it so important? I'll explain it. So what we're going to look at is this is the last area where buyers tried to get in the market and sellers overwhelm them and push lower. Now, all of this is just noise to me, and I'll explain why. Because imagine, I'm going to go on a rant, I know I am. Imagine sellers are active in this area and they've pushed the market lower. Now, for me, and this is just my understanding of the market, unless we can get above this last area where sellers put their foot on the throttle and push the market lower, all of this, how do I know this is not profit taking? So when a seller wants to get out of the market, they're going to have to close that sell. It will add buying pressure. It's just my opinion. It's just my opinion. It's what I tell myself when I'm trading. I'm just looking at the markets and I'm running through this stuff and I'm saying, okay, so what's happened here? Sellers have pushed lower. Eventually, these sellers will want profit. When they close their sell, it's like taking a little bit of weight from one side and moving it to the other. It adds a little bit of buying pressure. This is my understanding of it. And so that to me, how do I know the difference between this here being a buyer wanting to come into the market or whether it's just a seller taking a bit of profit. Now, this is why structure is so important to me. When the market can get above the last place where sellers were active, it couldn't be profit taking anymore because it took more weight to get above this level than what it took to get it down. So this could just be profit taking. This could be a little bit of buyers coming into the market. This could be buyers taking profit and the market's then pulling back. Buyers might get more active, but what I'm interested in is where we break structure. Why? Because it shows me there was more buying interest than there was selling. It's no longer potentially profit taking. It's now buyers have made a decision. Buyers have committed. We're going into the market and we're going in with more force than the last active sellers. So it helps me stay out of the way of all this noise to the downside. So buyers have pushed market higher. I appreciate this going on for a little while, but I want to kind of run through some examples because we'll see how nuance based this is. Buyers are still pushing price higher, and we are still pushing higher. Okay, we've got a nice new high that's starting to form. So buyers are still in control of price. This could just be a little bit of profit taking from buyers. I'm interested to see a conviction from buyers to push higher to show me that this isn't just profit taking. Buyers are actively trying to go higher. And that's what we've seen. So we can now move this. And this is where it gets a little bit nuance based. Some people will say this is the low, but by my rules, remember, the last bearish candle, I'm going to put it on the low after the last bearish candle. Same reason as before. If I put it on this low here, I'm including all this sideways action where buyers and sellers agreed price was worth the same. What I want to do is I want to be looking at this area because this is where the buyers decided to put in the volume to go higher. Some of this could be news driven, sure. Some of this could be fundamental shifts in the market. But what I'm really interested from a technical perspective is this is where buyers push the market higher. And so this is why I put a line on this area because I'm going to be a buyer until you break this level. That's the idea behind this. So I'll play one more through, then we'll drop down the time frame. So we can put this on the high. Let's see what's happening here. Nope, we couldn't make a new high. So we're just dropping back into this range. And this could just be a bit of profit taking from these buyers. Remember, perhaps they want to get paid as well. So market's going sideways right now, and we couldn't break this low. So where the buyers were active, price pulled back. The market pushed again from this level. We're just in the middle of a range. Again, we couldn't break and close. Again, some traders will call this a liquidity grab by getting above this high. Some traders will call this a supply area because the market has sold from here in the past, pulled back, sold again. So all sorts of different narratives we can use, but it's based on structure, keeping it nice and simple. So I'm still saying that buyers are in control of price. Now, sure, we've got this range forming, but until we break and close under this low or above this high, I'm happy to sit on my hands. Not yet. Okay. So all the market did through this, and this is how I avoid getting chopped up, is the market pushed up, it came back, it oscillated around, and then it pushed higher. It came back, it oscillated around, and then it pushed higher again. Now, by drawing structure the way I drew it, I get to take this here and remove that. And this is terribly messy. Let me do it again. By drawing structure the way I drew it, I get to just do this. And that's so much cleaner because I've just got a higher high, a higher low, a new higher high, a new higher low, and a new higher high. How we know we have a new higher low is when the market breaks and closes above a previous high. And so I get to move this to the last bearish candle. Last bearish candle is this one. So I get to move it right to there. And now I can say buyers are in control of the market again. So 4-hour structure, it's been nice and pleasant. It's been nice and clean. What I'm actually going to do now is I'm going to get rid of all this. I'm going to jump down to the 1 hour. In fact, I'm going to jump down to the 15-minute. I'm going to skip the time frame. I'm going to go to the 15 because it's going to be super, super messy. So we'll take some random date and I'm going to speed run this a little bit to keep it nice, quick and easy. But I want to show how much messier the market gets on a smaller time frame. So nice rules-based system. And yeah, we're already looking at it and saying, like, what do we do here? So nice, clean, well done. That's a fib. Nice clean low, which is this level here. We've got a nice clean high, which is this level here. And now I'm just following it up and I'm looking for the last bearish candle that made this high. In my mind, it's going to be pushed. It's hard joining a story halfway through. I like going candle by candle. So we've got bearish move, push up, pull back. We've wick, didn't make a new high. Okay, I'm going to go with this. And we're already on the back foot on the 15-minute. We've already got every other candle is either a bullish or a bearish candle. We didn't have this on the 4-hour. So already we're bringing in noise into our trading. So what do we got? Okay. Sellers have now, nope, we've wicked and gone back into the range. Let's see if we can get a break and close. Not yet. No. Nope. Let's play this through. Okay. We've got a break, close on this high. I get to bring this up to the low after the bearish candle, which is here. I'm going to use this low, and I'm saying buyers are in control of price. And now sellers have taken control of price. So now this level goes on the high of the last bullish candle. Yep. And buyers have now taken back control of price. And this is what you get when you trade lower time frames. You get this constant chop and change of buyers and sellers and buyers and sellers. So now we're going to put this level on here because this is the last bearish candle before we made a new high. And we're just going to play it through. Equal highs, pushed up. Nope, not a new high yet. You can see I'm looking at this high there, and I'm saying this isn't a new high yet. So buyers are still trying to push price higher. Where are we? We're in the middle of a range. Some traders love trading this stuff. I don't. I like to see who is clearly driving price. We've closed out of this range. I can now move this line to the last bearish candle low, and buyers are clearly in control of price again. Let's see what happens now. Nice new break and close. We can move this back to this low. Buyers are still driving price higher. And we're going to put this on the high. So buyers are in control until we break and close under this low. And so these lines create a framework for me. Nice, simple framework where I can just look at the market and sit on my hands until we move outside of these lines. Nice rules-based system. A couple of times we'll get these kind of small candles where it sort of closes on the high and we have to make a discretionary decision. But this is where I come full circle and I say, if I'm in doubt, I just sit out. I just wait for the market to go clearly. This is, clearly buyers are back in control. And I want this stuff to happen. I appreciate this has been a bit of a long video, but these are the kind of decisions that as traders, we have to navigate and say, what do we do when the market wicks up and then just closes back? Are buyers still in control? Should I move this to this low? Should I move it to this low? What do I do here? These are the decisions we have to navigate as traders. And this is why it took me hours and hours and hours of studying and just watching, because when the market wicks and pulls back, I now get to say, it's not clear to me. It's not clear if the buyers made a new high because they didn't close. So I'm going to sit on my hands and I'm just going to wait because buyers are still in control until we break this low down here. We can jump to the 5 minute and we can say, but on the 5 minute it broke and closed. So now I must move this line to the last bearish candle low. And this is where you end up getting into the noise of the market. And I believe the edge is less present on the lower time frames. So for me, I like to keep it nice and simple. Down on this low, where were we? Down on this low here, because that's made the high. I like to keep it nice and simple and try and stay on the higher time frames. 15-minute brings a lot of noise in itself, but nowhere near as much as the 5 minute and the 1 minute. So we could see how much easier this was to do on the 4 hour relative to the 15 minute. So if you're newer to trading, if you really want to get this one tool down, which to me is absolutely incredible when it comes to my trading, I would start on the higher time frames. Pick any currency pair, start on the daily, and then go back through on the 4 hour. Pick a random date. Like I say, you can do this on MetaTrader 4. There is a strategy tester. I believe it's free to use. I've done hours and hours of studying on that. But TradingView is a little bit cleaner for me. So we'll play just a couple more through, and then we'll kind of wrap it up. So who's in control of price? I'm not sure. We've finally got a break and close. Finally. I'm just not convinced. Give me a little bit more. So I'm still going to say I'm in a range. There we are. Nice. Nope. Wix pulled it back in. So I'm still in a range. And then finally, I will see a candle and it makes sense to me. I don't have to make a hard decision now. I don't want to be in the markets trying to make a hard decision. Trading is a hard thing to do anyway, because we can find all sorts of reasons to make it more difficult than it should be. And when I'm looking at all these wicks and candles that just kind of close on these levels, it makes it hard. I want a nice, easy decision. That's an easy decision. Now what I can do is I can go ahead and put this on this low and say buyers are still pushing price higher. Now, I know that we haven't gone into how to frame trade ideas from this, but when I got this one thing down, it changed my trading. It gave me these really key areas where I could say, hang on, buyers are in control. Why do I want to be a seller? I want to be a buyer. Where do I want to be a buyer from? And then I would ask myself these questions. And so this gave me the framework to know how to participate. We'll do one more. So market's clearly moving higher. We've got a nice bearish candle, push to the upside. We can now put this on this low. And we can say that buyers are still pushing price higher until we break this level. And you'll get to a point where you can literally just buzz through this and just keep moving it up and say, yeah, buyers are in control. Oh, we broke, didn't close, keep going. Broke on the level. Let's wait for another candle. No, push back into the range. We'll chuck this on the high. You'll get to a point where you can just speed run this, and you'll know your edge. You'll know what you're looking for. You'll see these candles that break and close, and you go, okay, finally, we've broken close on the high. Now, do I want to use this bullish candle here? No, because it got rejected. I'm going to use the high of this bullish candle here. We've broke, we've closed. Sellers are attempting to push lower. If we break this level, it shows me that buyers are doing, buyers are doing more than just taking profit. They're actually overwhelming the sellers. So I know it was a bit of a long one. If you made it this far, congratulations. You're genuinely interested in improving your craft, because some of these videos, some of these drier videos, they're the ones where you grow as a trader. No one's going to look at this and go, now trading suddenly makes sense. The whole point of this is that it just gives you a simple rules-based system that you can look at and you can go, okay, that's what Rich does. Now let me go and pull up my charts and let me see if it works for me. And the first few times I've done this, it frustrated me. It didn't make sense. I had to keep making these hard decisions, and repetition. Like anything in life, you just keep doing it, you get better and better and better and better. And I would encourage you to just get this one tool down, how to read structure. Now, maybe you don't read it the same way as me, and that's totally cool. Like, I'm not saying I read structure the best way, but I use it as one of the core skills that keeps me profitable. And so I would use structure in this way. And now I've given you the opportunity to look at that and say, okay, I disagree with this. If you disagree, tell me in the comments. I'm always interested in improving my craft, and I'm always interested in learning more about the markets. Now, Would I change the way I read it? I would only change it when I start taking loss after loss after loss. When I frame my trading ideas, I get some pretty good traction with it. So I'm much more interested to continue reading the price the way I read it, and I just wanted to be transparent about it and show you how I read this candle by candle by candle. If you stripped away every tool I use, everything I know about the market, and you said you can only trade from one thing, I'd use structure. So that's got to tell you something. I've been doing it 3 or 4 years where I've been using structure and I've been getting some good traction with it as well. So, full disclaimer, am I a trader that wins every single trade? No, but I am consistent in my analysis. And the reason I'm able to do that is because I'm using the structure of the market. So, I'll probably dive a little bit deeper into this in some other videos. If you've got some questions, put it in the comment. If you haven't done so, hit that thumbs up button, subscribe to the channel. Give us some feedback on what you want to see me kind of expand on this. Very easy videos for me to make. I can genuinely sit down and talk charts for hours and hours and hours because I have spent thousands of hours going through the market, studying the candles. And to me, I believe there's a story, I believe there's a narrative, and it underpins everything I do as a trader. Every trade I take, there's a reason why I'm taking it because the price action makes sense to me and it's from structure. So if you're struggling with your trading, keep putting in those hours, keep it simple, trade just one thing at a time. And if you are genuinely new and you're starting out with your trading journey, I would encourage you to just keep looking at structure. It is the backbone of so many different trading styles. So if you can read structure, at least you'll have a good tool in your toolbox to hopefully help you move forward with whichever way you decide to trade in future. So thanks for watching the video. I'll catch you again in the next one. Cheers.